October 22nd, 2024. You can see we're getting buyers below yesterday's low. So not really all that surprising considering it was a pretty poor doji bar on the daily chart. Pull up the daily chart in a second here. So you can see we ended up getting buyers below here. It's possible bulls who were buying for any reason, hoping to get a rally. I don't know what this is. Let me close something out. Okay. Bulls who were buying, hoping to get a rally, were disappointed, and they started to sell out of their longs. And then when we got this rally, the remainder of the bulls used this rally during yesterday to sell out of their longs. Some traders would look at it and say we had one leg down yesterday and then a pullback. And then this so far today is the second leg down. So they want that to be a two-legged correction. So the doji bar on bar one, let's take a look at the 15-minute chart, the Globex chart. Oops, sorry, hold on. You can see basically a bear trend or bear channel most of the night. So it really was the same as a spike pullback channel. It's just that the pullback was deeper and pretty complex. However, the bears who sold the close down here were able to get their second leg before it ran their stop at this high. So theoretically, the bears who sold the close and scaled in higher are able to get out down here. So we'll pull up the hourly. I pull up the 15 minutes just to get a basic idea, but I really like to look at the hourly for context of the day. You can see we're towards the bottom of an overall trading range. We've been in a trading range for a little while now. You can see we had this bull spike, and then this looked like a new spike, but it actually ended up just being a leg in a trading range. So bottom of the trading range has been in this general area for a little while now, and the top of the trading range is pretty far above. So we have 40, 50 points of potential upside if this is the bottom of the trading range and it holds. You can see we keep getting higher lows. So that's something to keep in mind. For me, recently, I say, but for at least a couple weeks now, I try to only trade leg one, leg twos. So, you sell the close for a second leg down, you buy the close for a second leg up, or maybe you sell the close for another leg down. And the study I've been running on it, where I go through past days, it's pretty. I can interpret charts in real time the same way I do in my reviews at the end of the day. So for me at least, that's not super difficult. One of the ways to get good at that is to just during the day, right now, write down the pattern that you think you're seeing. Every bar, write down the pattern you think you're seeing, and the pattern you think is forming for the bulls and the bears. And then at the end of the day, look back and see if your pattern recognition is correct. And I did that for a lot of years, so I'm pretty good with reading the chart real time. But obviously, trading and the math behind it is its own thing. But anyways, as I was saying, I've been just trading leg one, leg twos, and in the study I've been running, where I go through all the past days, I find setups. I found 100-ish setups, and they generally have about a 70% success rate. And if I can have a 70% success rate real time, it's a really really profitable system. And I'm currently trading it at about 67% profitability, which is close enough. I'd like to get if I win one trade today, then it'll be 70, um, but 67 is close enough. So I think it's going pretty well, and I'm just going to keep doing this. So, anyways, bar two, if it closes on its high, it's a possible low of the day, but it's not really high probability. I think it's kind of hard to sell down here. You're selling 25-ish points below the moving average, so I don't really want to do that. Or 20, no, a little over 20 points below the moving average. Really not my thing. I don't want to sell all the way down here. To me, we're trying to break out below yesterday's low, and it's not a strong sell signal bar. So I'm thinking there's probably going to be more buyers down here. If two closes on its high, it is a possible low of the day, maybe 25% chance. It's a lower low double bottom for the bulls with 25 yesterday. So the bulls want lower low double bottom and a breakout above the neckline, the 81 high, but obviously it's really far above. Into micro double bottom 1-2. The bears see the gap down as a spike, and 1 is follow through, so they're hoping that any sort of rally we get on whatever bars 2, 3, 4, 5, however many bars we end up rallying, is just a pullback. The problem with buying bar 2 is you're buying kind of high in the tight trading range of bars 1 and 2. Okay, so it doesn't look like it's going to close on its high. You can see it's sold off. So that is not a good buy above bar 2. That to me is just a lot more disappointing. So I think there'll be sellers above bar 2 and there'll be buyers below. This is in general not very good, so I don't really want to, had this closed on its high, I wasn't going to buy. It's not my trade, but some traders would take the buy or swing, taking a chance we could rally somewhere back up into this area. So you can see initially sellers above bar 2. We might get 3 straight doji bars in the open. So if bars 1, 2, and 3 are all doji bars, really not all that great for anyone. So expect buyers below, scaling in lower. So should close pretty much a doji. So doji bar, right? And look at yesterday. We had doji bars on bars 1, 2, and 3. And look at today. We have doji bars on bars 1, 2, and 3. So yesterday, I think, was an unusual day. After you get a lot of dojis on the open, it was more of a trendy day. And usually you get more of a trading range day if you get these types of opens. For me, I think that just looking at the context of the daily chart, this is a good exercise to do. Go look at the daily chart every morning and try to visualize what the next bar is going to look like. So what usually happens when you get this sort of pattern? There's usually buyers below. So if you watch the stock market for long enough, you kind of start to figure out what this bar might look like after the bars that precede it. So the more time you spend doing that, the better you'll get at it. And basically, looking at that, I think that we're probably going to bounce a little bit today. But just being at yesterday's low, and this was a whole big bull leg, so there's going to be buyers below this low. Chances are, what you could do today, to be honest, if you wanted to, was just buy yesterday's low, the bar 25 low, since this is a bull leg, and usually bull legs get another leg up. You could have just bought the low and put a stop, a measured move down. So you buy during bar 1, and you put a stop down here, and you put a profit target up here. And I would say you have at least a 60% chance of getting up here before we get down here. So that is something you could do. But you'd be in that trade all day. For me, I see trading range price action with bars 1, 2, and 3. And it looks like 4 is probably going to be some sort of trading range bar as well. So when we're getting a lot of trading range price action early in the day, makes me think that we're going to have obviously a trading range day. So like I mentioned, in trading range days, you don't want to sell these breakouts. You want to buy these breakouts below bull legs. So you get a bull leg that's lasting 50 bars, you know that it's probably going to get another leg up. The reason is, let's take a look at this on like a 15-minute chart or a 30-minute chart. This might not quite demonstrate. I'm going to look at a 30-minute chart. So it's 3 pushes up, but a lot a lot of strong bull bars. So you're buying the low of the wedge, basically betting that the breakout below is going to fail. And with how strong these bull bars are, I think the breakout below most likely will fail. Okay, so for a bull bar, this is the average price, right? You have to think about moving average as the average price. And this is the average price over the past 20 bars. So as we get more and more bars down here, and we're not racing up towards the moving average, the closer we get to this price becoming the average. So, I used to make a big mistake. Whenever I'd get a gap down, I would look for any sign of bullishness and just look to buy it because I was thinking, we're well below the average price. But the reality is this is not trading like we're well below the average price. It's trading like this is the average price. When you open, 25, 30 bars or 30 points below the moving average and get three dojis on the open, that's the market telling you it agrees with this price and it thinks this price is correct. Have we seen the low of the day? I would say probably not. Have we seen the high of the day? I would say probably not. Should be buyers below 4, but they're scaling it lower. Like I said, I'm not going to do it, but I do think it's reasonable to just buy the 25 low. So yesterday's low, fade the breakout below the low of the day, since this is a pretty good looking bull leg, and just take a chance we get up into this area before we get a measured move down into this area. I think you have at least a 60% chance of success just getting somewhere up into here. The daily range is going to triple. It's only 12, and it's probably going to become 30 to 40. So it's not unreasonable to think we get 25 points to the upside before we get 25 points to the downside. Okay. Am I buying above bar 5? No. I mean, it's a doji bar, and you're buying high in a tight trading range. So, as much as, yes, it's upward, we have an upward slope 1, 4, and then 1, 2, 3, 5. So we have the bottom of the channel is 1, 2, 3, 5, and the top of the channel is 1 and 4. The reality is, if you're buying above bar 5, you're buying high in a tight trading range. So it's probably better to be looking to buy pullbacks when we have 4 doji bars in the first 5 bars. So you don't really want to buy above 5. You actually probably want to buy below 5, if anything. So probably a better area to buy down here than up here, as I was mentioning. starting to bounce. So bar 6 forming. Again, better to buy below this than it was to buy above it. I'm not sure if we formed the low of the day. This is a small micro channel. The bears are hoping, obviously, spike, and then we're getting a pullback. So 1, pullback, 2, pullback, and then hopefully 3, or potentially 3. I'd imagine we'll at least rally back to around this low. Trading range behavior, we should close gaps, and this is a breakout point, so we should close this gap at some point. Is this the low of the day? I don't know, maybe. It's not really high probability, but we are slowly channeling up. So if we get a strong breakout, that could change. So bar 7 is a doji bar. What do you notice about this open? Doji bar, doji bar, doji bar, doji, doji, doji. We have 6 dojis in the opening 7 bars. That is pretty unusual. And when you get something like that, it's really not great to be trading at all. And this is one of those areas where I started talking about, an inverse of my leg 1, leg 2 study that I'm doing. And kind of the reasons I'm mentioning buying the low of this leg is because I did that the other week. Well, first off, I bought the low of bar 8 during this bar, and I used a stop, a measure move down. And the study that is essentially it's inverse of buy the close, because you have buy the close bars and then you have bars where you actually want to buy the low. And recognizing the difference between that is important. And I thought 70% chance if I buy this low, we're going to get back to here before we get a measure move down. And I'm kind of thinking the same thing over here, which is one of the reasons why I mentioned it was kind of okay to buy down here. It's because I thought 70% chance. If you're buying down here, we're going to get up here before we get that measure move down. As I mentioned, I did not buy it, but just because it's not a trade that I normally take, and I'm still working on the math for that study, but I think it was a good trade. So with all these doji bars, do I think this is going to be a successful breakout? Not particularly. You're buying up here, you're risking a lot, and it's really not all that great. I think the bears who sell above here and scale in will most likely make money. I'm gonna add this example to my study, but I'm gonna have to do a better work of defining buying below third legs and buying the lows. This would be buying below an entire bull leg. So you can see 8, not what it was a minute ago. And why is that? Because we have so many doji bars. We have 6 doji bars and 7 bars. So breakouts are not going to be successful. It's pretty unlikely that a breakout is going to succeed. So it's better not to bet on breakouts. So bulls who were long for any reason got a rally to the moving average and decided that that was good enough for them. And they scalped out. What if nine's a bull bar closing near its high? Not really, not really anything. And not anything worth buying. Beat inside bar and a high one. But if you're buying up here, you're essentially betting on this being a successful bull breakout. So you have to ask yourself if you want to be buying a high one, high in a trading range. Probably not. It's becoming a bear bar. So it's a possible wedge rally. So inside bar high one nine, but again, probably better to buy below this bar than above this bar. This is a trading range open, so don't fool yourself looking at bar nine into thinking this is some sort of bull trend. Look at all of the doji bars. We have 6 doji bars out of the 9 bars. This is a trading range open. So if anything, you'd probably be more willing to buy down here below the bar 9 low and below the bar 8 low. So this whole buy climax below the buy climax low makes more sense than above it. Even if this is a bull trend with bar 9, usually high ones lead to deeper pullbacks and then trend resumption. So you'd have to be expecting a deeper pullback after bar 9 either way. If you bought above 9, you also bought right on a flat moving average. So that's really not great. So probably sellers above scaling higher and probably buyers below scaling and lower. Did you buy the 9 low? I don't know. It looks like a third leg up, so you probably could. There's definitely a way to make it a profitable trade, but that is just a bit difficult for me, so I would not personally do it. So what do I need to see to trade? Well, this is a trading range day, so it's a little bit more difficult. But this is the environment that I trade in, where I'm expecting a second leg, something here or here, where I'm expecting a second leg up, maybe expecting a second leg down, expecting a second leg down. So that's the kind of environment that I am trading, or I am trading in. So 10, a bear bar closing near its low, but tight bull channel up. Is it a possible high today? Yeah. You can see it's really interesting when the market does this, but it's kind of emulating. We had three pushes up yesterday and then big bear bar closing near its low, bit of a surprise. Kind of three pushes up today, kind of a bear surprise. It's not as clean as yesterday's pattern and it's not as reliable. I think selling below 11 yesterday was a better trade than selling below 10 today. However, I still think it's going to go at least a little bit lower. So I think 10 is good enough for two legs sideways to down. However, sideways to down means sideways to down. It doesn't mean we're going down. So we might just go a little bit more sideways for a couple of bars here and then get a bounce. I think the bar 9 high is going to get tested again today. So I'm not all that bearish. So 11, not really that great, right? Kind of bad follow through. We're going to get a second leg sideways to down, but it could just be a tail. It's really not as good as it could be. And again, look, we traded below the bar 8 low, the buy climax, as I mentioned, 8-9 buy climax. Third leg up, right? 1, pullback 2, pullback 3, third leg 8-9, probably buyers below the third leg for another leg up back to this area. So this is kind of part of the study that I was looking at. It's actually, okay, this is actually interesting. So if you bought below this low, the bar 8 low, and you put a stop and measured move down, most likely we're going to rally back up into this area before we get down here. I don't have the exact stats. I assume it's like 60 to 65%, something like that. Yesterday, we had 1, pullback 2, pullback 3. Usually, if you buy below that third leg, you should get another leg up. However, in this scenario, you can see the bulls who bought below the third leg immediately got trapped, and that's part of what led to this big sell-off. What if 12 is an inside bar? It's a low one short for the bears. Possible that we're starting some sort of move down, but not super likely. Ten through 12, enough for a second leg down. I'm not going to sell the close 12. If 13 is any bear bar, I might sell that close. Just taking a chance we get another leg sideways to down. But this is a minor reversal. I gotta go back at some point. We'll pull up what I'm talking about. I gotta go back at some point and go through all these and do the minor versus major reversals and check out the probabilities for each, because I'd imagine that there's a higher probability for major reversals than, or major breakouts than minor breakouts, major legs than minor legs, etc. So if 13's any sort of bear close, that's 4 straight bear bars and definitely enough for a second leg down. So I will sell the close if 13 is any sort of bear close. Well, closing below the 12 low at least. If it's a doji bar like this, I'm not that sure. Kind of going to have to see how it looks. But I mentioned we're going to get 2 legs sideways to down from bar 10, but you don't really know what it's going to look like, right? So you have to get the first leg, and you can use the first leg to judge if you think it is strong enough for a second leg. Usually, well, I say usually, I through the study I've done so far, usually about there's only about an 8% chance that my actual stop. So if I sell this close, my stop will be up here, and there's only about an 8% chance that my stop gets hit before I get out in some way, shape, or form, whether at my profit target or whether I just get out with a small loss or a small profit. But you sit and hold through minor reversals is the idea. This gap down is big enough that it should get the second leg sideways to down. The issue with selling 13 is the channel up is reasonably tight. You're selling in the middle of the trading range, towards the middle. But we don't have a close above the moving average yet today. I think it's important that bulls rallied pretty strongly and tried to get above the moving average and failed. So I shorted. I don't do I like this short? Not really, but it's within the bounds of my system to sell that. So do I think we're going straight down? No. I think if anything, we're going to go more sideways to down. Again, I'm not in love with this trade. It's not my favorite trade that the system gives me, but it is a trade. So I do have to sell the close at 13. Pause this and go log this. Yesterday was actually the same bar. Kind of funny. Yesterday, I also sold the close of 13 looking for a measured move. And it was based off of a kind of similar pattern. My stop is above 10, and my profit target is right here. So my risk is a little bit bigger than my reward, which is one of the reasons why this works usually, this type of system. So log in the sheet. minor reversal. You can always bet on a second leg down from a gap too. It's usually pretty reliable. Looking at the actual risk reward profile, would be 9 to 7.25. Net about 2.375 points per trade over the course of 10 trades. If the probability is 70%, which back tested them on my 90 something example, 90-second example. But a couple of bars up here, and you know, I don't count trades that I end up breaking even on, so I just put zeros there. Yeah. Part of the reason why this is this wasn't super hard to make is because I've been trading for so long, so the price action just kind of makes sense. Am I going to exit if 14 closes on its high? No. This should get a lower high. It's kind of part of the premise is that 10 through 13 should get a lower high and a second leg down. And while we should get back to the 9 close at some point today, I think the fact that we didn't rally to a new high is important. Bear close, good for the bears. We have 5 straight bear bars. So we're probably going at least a little bit lower. Again, still expecting a second leg down, even if we rally. Part of the reason why I wanted to make these live trading videos is to kind of show how imperfect I am at trading. And, the goal is in 5 years or a couple years or whenever, when I'm, making a good living doing this, to kind of be able to still have these videos up from a while ago. And I might even repost. I took down a bunch of videos from way in the past, but I'll probably end up putting them back up at some point just to show, the starting point and how long it takes. But, I figure if people can watch somebody go from, where I was a couple years ago making these videos to now, or to a couple years from now, it'll help people realize, how possible it is, even if it is a long journey. So another bear bar on 15, but look at all these tails, right? So it's a bear channel. You could argue 10 is the spike. Sometimes the spike gets a measured move, something like that, which I suppose it did on 11. But bulls or bears, what do these tails tell you? They tell you that we keep selling pullbacks instead of selling closes. So why are we bouncing here? Because bears aren't selling here, they're selling up here, and they're going to sell more up here. But again, nothing for me to do, even if 16 closes on its side. But there's not really anything 16 can do to make me do anything, because the reality is it's a minor reversal up. The first reversal should be minor since we've had 6 straight bear closes. You'll get either one of two things usually when the market does this, and you'll either get a collapse bar and then a reversal attempt, or you'll just get a reversal attempt like 16. But sometimes you'll get like a collapse below 15 or something first. 16, a bull bar closing near its high. I'm not sure, or I'm still short. I'm not going to exit above 16. It's a minor reversal. Again, is selling that close the best trade in my system? No, but it is a trade, so I have to take it. As long as I just follow it, it usually ends up going pretty well overall. We haven't gone above the moving average yet today in 16 bars, which is unusual, especially considering 9 or we haven't closed above the moving average yet, I should say. Especially considering how big 9 was. I was surprised that 10 didn't, at least within the next 5 bars, we didn't get a close above the moving average. One of the ways 16 is a scary looking bar if you're short, but one of the ways you can think about it is, would you ever buy above 16 and expect to make money? No, if I bought above 16, I'd probably expect to lose. So it probably will not be a strong reversal up. This is pretty unusual. So, like I mentioned, usually only about 8% of the time I get stopped out with this sort of thing. And this might be one of those times. So we have good looking consecutive bull bars. We're trying to get a breakout above the wedge, 1, 2, 3, and a measure move up. First close above the moving average, and it's closing far above the moving average. So that's good for the bulls. Okay, so this is pretty much the worst case scenario bar for the bears. Kind of debating if it's even worth exiting. My stop's up here, so I'll get out. I probably should. But if 18 closes strong at all, I'm going to be buying the close of 18. Not really sure 18 is going to qualify as something I should buy the close of. I'm probably going to wait for one more bar. 19 is a bull bar. Well, 18 needs to be a bull bar. So we'll start there. Okay, so I'm not buying above 19 now, regardless, since we got a bear bar on 18. So I'll remain flat. Had 18 been any sort of bull close, and then this was happening on 19, I would have bought the close. I would be buying the close of 19 if it closed strong, but I don't like 18 as a pause bar, so I'm not going to buy up here. 'So you can see the bulls who bought the bar 8 low and scaled in made money. Or bought the bar 8 low instead of bar 9 high. They bought the buy climax low instead of towards the high. Made money. Buying below third legs, generally pretty effective, depending on the context. Would I sell the high, the 8 high during 19? Probably not, because we're always in long, so I don't think it's quite as good as it could be. 16 and 17 is a spike, and this is a pullback, and the pullback is now staying above the moving average, so we might be getting the start of a bull channel here. It looks like, it's possible we get a bear spike and it becomes a trap and we just get a bull channel all day. That could happen. If it does happen, we're towards the top of the bull channel right now. So we might pull back. The high one buy above 20. So high ones usually lead to deeper pullbacks, which might be what happened here. So 22, another bull bar, but a large tail. Does this symbolize a really strong rally? Not particularly. So I'm not all that bullish. It's not really great buy the close up here. Seems like an area where we should be more looking to buy a pullback in general. However, there should be buyers below 22 scaling in lower. We have an open gap here from the bull surprise on 17. 15 is not a high probability trade. Bulls are hoping higher low major trend reversal, but after this many straight bear bars, it's hard to take that buy. Probably buyers below 22, willing to scale in. So deep pullback here, as you can see, on bar 24. As I mentioned, pull back into this gap and testing essentially the 16 high, the swing point. Essentially testing the resolve of swing bulls. So 24, some traders would look at it as a third leg up. 1, pullback, 2, pullback, 3. So if it is a third leg up, probably more traders buying below than above necessarily. Still always in long, but kind of hard to want to be long right now. We're not racing up in any particular way. Doji bar, doji bar, doji bar, doji bar, doji bar, doji bar, dojis. So what does this look like to you? Does this look like a bull trend day, or does it look like a bull leg in a trading range? It's probably a bull leg in a trading range. And if we get a reversal down around bar 42, it's possible that would be the high of the day. So we're still bouncing for sure, but I'm not sure how much higher we're going to go. It's potential. It's not great to sell the close of 15, but it's 6 straight bear closes. So some bears are going to sell that close, and they should be able to make money. So you have to be thinking it's possible that we come back to this area. This is also 16 and 17 is a buy climax. So 17 low is a buy climax, or 16 low is a buy climax low. So around the buy climax low and 6 straight bear bars, we should probably come back into this area at some point. So 25, a big bull bar. 26, if it breaks out to a new high, as possible breakout, looking for follow through. But the problem is your stop is really large below bar 24. You probably don't want to risk that much on a day like today. The tail on 24 is going to make your risk reward really, really difficult with any buy here over the next couple of bars. Probably going to keep the video running for a few more hours, but just very sporadically. So I'm probably going to pause. I would normally end the video right now, but I'm probably just going to pause it until I take another trade and just do it that way. I think it's a pretty tight channel, reasonably tight channel up, but it ultimately looks like a bear flag. So we did end up reaching around this low, and we might have to come all the way up here. I'm not really sure yet, but if the market tries to create sort of midday reversal, then that's probably a reasonable area to look short if we get a couple consecutive bear bars. A lot of times the market tries to break out around bar 30 if it's in a trading range a lot of the day. So are we going to sell off here? I don't know. We'll see how it looks, but not really much for me to do unless we get 3, 4, 5 consecutive bear bars. We might try to come back into this area. I wouldn't be surprised if we sold off to here and got some sort of double bottom attempt, maybe in 10 to 15 bars. But that's kind of what I'm looking for right now. So could you sell the close of 32? I'm going to wait for 33 because I think that, well, first off, if you sell the close at 32, your risk is about 6 points and you're only trying to make about 4 points. So not great risk reward. Also, I think the Bears need one more bar. I think that 26, 27, 28 is a possible first leg. And so 30, 31, 32 is a possible second leg. However, if 33 is another bear bar, it's less likely that it's a second leg, and it's more likely that it's going to get its own second leg, and it's more of a first leg. So if 33 is a bear bar, then I will probably be selling that for a second leg down. You could buy above 37 to high two. However, I'm not going to. It's a really good bull bar, though. It's a bull surprise. If we get, consecutive bull bars. I need 3 bull bars, basically. So if we get 2 more bull bars here, with at least one closing above this high, I'll probably end up getting long. We'll see. Still a pretty small day. 22 points, so still potential for the daily range to double. And as I mentioned early in the day, traders who buy below here, reasonable chance we get up here. So I still think reasonable chance we get up there. Some sort of measured move. If you were watching, 41 here was above the breakout point for a while, pretty much most of the bar until about the last 3 to 4 seconds, and then it sold off sharply. So if 42 closes above 22, I might consider buying, or I might wait for one more bar. It kind of depends on the bar. So if 42 is more of a doji bar but closes above the 22 high, then I'll probably wait for one more bar. But if it's a good looking bar, I'll probably just buy the close, stop below 39, and go for a measured move. I'll check back in. If a signal happens here, then I'll take the trade and check in with management, and then just probably be done for a little bit for most of the rest of the day, I would imagine. About the close of 42. Sometimes it's okay to wait for one more bar here. I think, it wouldn't have been wrong to wait for one more bar to see what 43 looks like, but I think it's credible to buy the close of 42 as well. I'm looking for a measured move up, so I think high probability I get it. Has been more of a trading range day, and we're getting a breakout. You could argue it's a wedge, 1, 2, 3, a breakout above. So I'm trying to get, like I said, a measured move. I'll check back in. So I pulled my stop to the 45 low, and my profit target's right here. I would imagine it will probably get hit. Honestly, I would like to see it 50 if it's going to act like this. 30 seconds into the bar, I would have liked to see it just go up and get me out. But with 50 is a big bear bar closing near its low, I'll have a decision to make for sure. But I'd like to see another bull bar. But for now, my stop's just below 45, and I'm holding, trying to get up into this area. Again, like I mentioned, it was totally fine at the beginning of the day to just buy this low and put a limit order up here and a stop, a measured move down. You have to trade really small, so you're not risking more than your normal position size. But if you do that, 70% chance you walk away from the day with a profit. So I don't really have an issue with doing that. But I'm going to pause, and then I'll just update with the end of the trade, and then I'll be done with this video. Okay, so I just got filled. I made a good amount more on this trade than I lost on this trade. And I ended up with almost exactly an average day's profit, which is, well, I say an average day's profit. I have an average profit goal per day, obviously. And it's basically exactly there. So I'm still going to wait. Theoretically, I don't know if we're going to sell off at all because this is looking pretty strong. Could be climactic, but theoretically, if we sold off back to the 47, 48 low, that would be support. So if we do get some sort of sell off, look for the low as an area for a bounce. All right, that's going to be it for this video.